In this video, I'll be teaching you how I trade and how I made those profits you see online and social platforms. So it's like I'm literally showing you the strategy I use to making money so you can also make money from trading. So I won't be talking about how the markets are making higher highs and higher lows in an uptrend or lower highs and lower lows in a downtrend. You should know that by now. But if you don't, I'll recommend you check out this video right here where I explain all of that. So without wasting much of your time, let's dive right into the content of this very video. Just so you know, I trade continuation pattern, and these continuation patterns are like the market is going down and then it's taking a little break so it could go down the more. So this is how the continuation pattern look like. The opposite of a continuation pattern is a reversal pattern. A reversal patterns are like the markets are going down and then it's reversing back up, meaning the market wants to start going up. So these reversal patterns are your head and shoulders, double top, rising wedge. So I trade continuation pattern. Checking out the bigger time frame, what trend we are in. If it's a downtrend, then I'll be looking for sales. So I'll go over to the smaller time frame, wait for this very continuation pattern, and then this is where I enter. So without wasting much time, let's see how this works on the main chart. So right now you can see this market is obviously uptrend. This is the 4-hour time. Take a look at this right here. 4 hours. So the market is going up, the market is uptrend. But if you notice from this point, the market made a market shift. The market is going up and then started consolidating around here. And this point we had our market shift. Market gave us this market shift right here. Let's focus on this market shift right here. Take a look at this. This is a market shift. And don't you forget, this is the bigger time frame. So we having a market shift in the bigger time frame. This means a lot to us. This means the market is about to change direction. The market is no more going up. This candlestick closed below these two candles. So this means this market is about to go down. So right now, let's go over to the 15 minutes time frame where I show you how I take my trade when I see something like this. So this is the 15 minutes time frame. This is our market shift. This is 15 minutes time. So right now, this is where we wait for the market to give us the continuation pattern. Because right now, the market is going down. So we are expecting something like this. Going down, consolidate to the upside, like taking a break. Then we're expecting the market to move down more. Now, at this point, the market is forming the continuation pattern because the market has been going down and now it's taking a little break before it could go down the more. So this is where I mark out my trend line, giving me two touches. This is the first touch of the trend line and this is the second touch of the trend line. And these points you see right here are they are supports. You can call this support level. They are support level. So I'll be waiting for the market to break and retest this support level. So this is what I'm talking about. Break this level and then retest. So at this point, this is where I enter my short position. Then I expect the market to go down. So right now, let's wait for the market to break this support and retest the supports before we can enter a short position. Okay. The market just broke our support level and it has retested it. Take a look at this. Market broke the support level and now it's retesting the support level. So this is where I enter my short position because I've gotten my confirmation enough that this market is about to go down. So first of all, never forget we are selling because the market gave us a market shift. So this whole trend is about to go down. So going to the smaller time frame, which is the 15 minutes time frame, we waited for our continuation pattern, which is this. You can see this very clearly. The market goes down and now it's taking a little break so it could go down again. So we waited for the market to form the continuation pattern, which the market did. And then at this point, this is where we're waiting for the market to break below this support level. This is our support level. So waiting for the market to break and retest the support level. So this is where we enter a short position. Stop loss. I always use a 20 pip stop loss. So this is a 20 pip stop loss. can see right here, 20 pips. So at least your stop loss should always be above the recent high, the recent resistance level, because this is a resistance level. The recent higher high, this is your higher high. So I entered this market at this point, my 20 pips stop loss. I might take profit. 5x to reward ratio. So standard might take profit to the downside for a 5x to reward ratio. This means if I'm risking $100 in this trade, I'm getting back $500. Or if I'm risking a $10, I'm getting back $50. Or if I'm risking $1,000, I'm getting back $5,000. Do you understand? That's 5 risks to reward ratio. So let's wait for the market and see what the market does. Right now, the market is going down. We are in massive profits. Okay, the market is forming a little bit of a setup right here again. Market is consolidating to the upside. Okay, let's take a look at this. The market is forming another continuation pattern. You can see this clearly from here. So same routine, same thing we did. Drawing our trend line, giving us two touches. This is the first touch of the trend line, and this is the second touch of the trend line. So this is where we say, okay, we'll be waiting for the market to break below this point, the last low. You can see this very clearly. This is exactly what we did here. We drew our trend line and waited for the market to break and retest this low. So the same thing we're doing again. We draw a trend line. Now we're waiting for the market to break and retest before we can enter another short position. So let's see what the market does at this point. At this point, we can adjust this trend line to this point, and we can say we're waiting for the market to break this low. Same thing. So the market is approaching our low, trying to break, but it's not breaking at the moment. So right now, the market broke and retested the low. Take a good look at this. The market gave us a continuation pattern going down, and now it's taking a little break before it could go down the more. So we draw a trend line giving us two touches. Here is the first touch, and here is the second touch of the trend line, and then we marked out our low, this very low right here, and we are waiting for the market to break below this low and retest. So you can see clearly the market goes up, taking a little break to the upside, and then right now the market broke this low, and now the market is retesting the low. At this point, this is where we enter a short position, although we're still in profit in our recent position. So let's add another position at this point. So we're entering for a short position around here. Stop loss above the recent high. And I always use a 20 pip stop loss, 10 pips or 20 pip stop loss. As long as it's above the recent high, I'm good. You can decide to reduce the stop loss down here. As long as it's above the recent high, you're good to go. So 5 risk ratio, that's a times 5. So if I'm risking $100, I'm getting a $500 in reward. So if the market goes against me, I'm losing $100. If the market goes for me, I'm making a $500. That's a 5 risk to reward ratio. You can see it written right here. Risk to reward ratio 5. You can see this. So now let's see what the markets are going to do from this point. The market broke our trend line, and now it's retesting the trend line. So let's see what the market does from this point. And as you can see, the market smashed our take profit. So we just hit TP on our two positions. Take a look at this. This is our first position, and this is our second position. Take a look at this. we did same thing, exactly same thing on these two positions. So let's continue this market and see what the market does. So if we had left our position open, we would have made all these profits to ourselves. Take a look at this. It's a bunch of profit we would have made to ourselves. Okay, right now the market seems like it's giving us another pattern. We can mark out our first touch of the trend line and then second touch of the trend line. The market is giving us this first touch right here, and here is the second touch of the trend line. So let's see what the market does at this point. So we'll be waiting for the market also, same thing, same routine. We'll be waiting for the market to break below this very low right here. Okay, the market seems to be moving very much higher, so we can adjust our trend line up here, and then we are waiting for the market to break this low before we can enter for a sell in this market. Okay, so right now the market broke this low, and now the market is retesting the low. You can see this very clearly. Market is going up, and then the market broke this low, and now it's retesting the same low, so it could go down. So at this point, this is where we enter our short position, because the market has given us confirmation enough that this market is about to go down. So this is where we enter a short position around this area. Now stop loss above this high, this very high right here. So we are using a 20 pip stop loss again. So 20 pip stop loss, and we're sending our take profit to the downside because this market is about to go down. So 20 pip stop loss, same routine, same thing we did here also, same thing we did here. That's what we're doing right now again. So right now we're waiting for the market to go down to take profit. So let's see what the market does from this point. Okay, right now the market hit our stop loss. We just got stopped out of this trade. The market went straight to our stop loss. So this is the reality of trading. Trading is not always about making profits, making money. At some point, you're going to lose some trades. And this is an example of what I mean by you're going to lose some trades. So there's a saying in the Forex industry which says, even the best setup lose. So this is why risk management is important. This is why we don't need to go all in on one trade. We don't need to bet everything on one trade. So as you can see right here, we only did what we have been doing and we just lost this trade. Sometimes this is how trading is. The market doesn't always go your way. At some point, you're going to lose money. So we just hit stop loss on this trade, but nevertheless, we hit TP twice on these two trades. You can see this right here. So this is already covering up for this loss already. So and this trade is really a nice one. I posted this trade on my Telegram channel and we made money that very day. You can see this right here. We made money on this trade. So this is how the continuation pattern works. But this loss we just took right here doesn't mean the continuation pattern do not work. The continuation pattern still work till today, and that is what I'm using to make money from the market till this very day. So this is all for this video. Now you understand how the continuation pattern works. So when you're in a downtrend, you go over to the smaller time frame, wait for the continuation pattern to finish forming, wait for confirmation, wait for the market to retest your low before you can enter a short position. If you're in an uptrend, you wait for the market to retest your high before you can enter a long position. Do you understand? So as always, we're in an uptrend, you should buy. We're in a downtrend, you should sell. So all we have to do is look where the markets are going from the bigger time frame, then going over to the smaller time frame to execute what we know how to execute. So that's all for this video. Don't forget to like and subscribe, and I'll see you in the next video.